And it seemed to me, especially being at Tinder, a lot of my peers worked at big tech companies, and it just seemed like something was broken with the internet. And a lot of it came down to business models, with advertising being the primary business model of Web2.
Hey everybody, Tanner here with WAGMI Ventures. On today's episode, we have Jeff Morris Jr., founder and managing partner at Chapter One. For anyone who's new, this is the WAGMI Ventures podcast, where we do snapshots with interesting builders, founders, and investors from across Web3. Check out wagmiventures.io to learn more about the syndicate behind the podcast. But for now, let's get into it with Jeff at Chapter One. All right. Hey, everybody. This is the WAGMI Ventures podcast. I'm here today with Jeff Morris Jr., founder and managing partner at Chapter One. Jeff, how are you doing today? What's up?
Great. Yeah, really excited to be here. Just landed back in Los Angeles where I live. I was in the Bay Area for the week, so excited to be home on a Friday and excited to be chatting with you.
Awesome, man. Yeah, I'm really excited to chat. No, we have a ton of great stuff to talk about. So let's just jump right in. You're obviously super well known as an investor and as a past product leader at Tinder, but I think I'm especially curious as I was learning a little bit about you. I'm curious how your Web3 journey came about too. So maybe a little bit about the story about how that Web3 focus maybe clarified or sharpened over time.
Yeah, absolutely. The original moment was that I bought Bitcoin in 2012, I believe. It wasn't a huge amount of Bitcoin, but I did it as a joke in our office, and we were all laughing about it and talking about how crazy it was that we were buying digital tokens. At the time, it was much cheaper than I think it was $190 at the time. My career as a product leader took me to Tinder, and I ran revenue at Tinder for about 4.5 years. At that time, we became the top grossing app in the world, and so on the Play Store and App Store, mainly through subscriptions. But what we were really doing was we were selling digital products. So it sounds, again, pretty silly to say, but we were selling things like super likes and boosts, and these were digital goods that people were paying a lot of money for. So I kind of had this built-in intuition that the way people interact with objects online and the value they place on those objects is very similar to the real world. And so it wasn't this huge leap of faith for me to believe in the value of digital assets. And then around the same time, CryptoKitties came out, and again, it was a moment where everybody in the Tinder office was kind of joking about it, but I stopped and said, there's really something here. And those were kind of the precursor to NFTs. And at the time, I ended up investing in Dapper Labs, their seed round, and it really got deeper and deeper in the space, because I think you probably know when you have that first moment of like the aha moment of understanding what digital assets are, and also just meeting really smart people in the space, you want to learn more and go deeper and deeper. So I ended up dedicating about half that. I had a scout fund at Index Ventures. Half the fund went to crypto, and at the time I invested in projects like the Graph and Compound Finance and a few others. And so I leaving Tinder, really wanted to become an investor. So I started a venture fund, and one of our primary thesis areas is crypto, and has remained so for many years. We've done things outside of crypto too, but I think in the past 5 years, we've tried to just stay really focused through different market cycles and continue to find really great founders in the space.
Love it. Okay. Super interesting. So I'd love to talk about Chapter One and maybe transition there. So I'm curious, because it seems across the board, it seems very important to you guys as a firm to contribute to building sort of this new internet that Web3 represents, right? And so I think my question would be, what did this idea of building the new internet mean maybe a few years ago to you? And what does that same idea look like, or is it different? Has it changed? What does it mean to you now?
Yeah, so I've always been just really excited about open source communities, building things in a more transparent way online, and creating more trusted systems and social networks. And it seemed to me, especially being at Tinder, a lot of my peers worked at big tech companies, and it just seemed like something was broken with the internet. And a lot of it came down to business models, with advertising being the primary business model of Web2. And, a lot of those platforms rely on just collecting as much user data as possible and using that data to monetize their users who really don't have any ownership in the networks they contribute to every day. And so I'm also a big Twitter user myself, and have seen at different points in time the platform kind of become at risk in different ways, and thinking to myself, if Twitter went away, I would basically lose all my distribution. And so to me, the new internet represents obviously the user on the internet, so ownership being a key part of that, but just aligning incentives with end users in a more in a more flexible way, and allowing them to own pieces of the network they contribute to. And when I say flexible, being able to take your social graph wherever you want is to me a really interesting premise. And then lastly, I think probably most important in 2023 is knowing what to trust online is extremely difficult. And so I think probably the biggest war we will face as a culture and a world is just the information wars that we see online every day. And so it's my hope that we can use the new internet and tools that blockchains provide, but there's things outside of crypto as well that are interesting, just to create a more trusted internet, because I think we've seen the power of misinformation and how that can result in a lot of negative things for the world. It's my hope that we can use Web3 and other new technologies to create a more trusted internet.
Very cool. Okay. Super interesting. So you guys have on your website this notion of moving from venture capital to venture contribution. And I'm curious, especially given your background as a leader at Chapter One, right? I'm curious what kind of activities go into helping founders build products specifically as they kind of seek and find product market fit. What are some of those things that might be distinct at Chapter One that founders might not get to experience with others on their cap table?
Yeah, I think we really, in speaking to founders across all verticals, but especially in crypto, find that having seen scale and built products for literally billions of users, our team comes from Twitter, Tinder, Scale AI. We've had folks from Instagram, Facebook, that those experiences are valuable within the space. And so I think early on in 2021, it seemed like we were actually kind of misfits within the ecosystem, because a lot of people didn't view us as being crypto native enough. And we kind of took that as a compliment, because we thought to ourselves, there's probably a lot of value that we can offer the space. And, we're not going to always be the most, like, we're not going to out degen some other crypto funds, but we are going to bring a really valuable perspective, which is, trying to build products is very hard, and trying to find product market fit is incredibly hard. And maybe there are ways that we can help accelerate that. And so some of the more practical things we do is we help a lot with defining metrics early on, and actually building dashboards for teams. So we have a data scientist on our team who has built retool dashboards for literally some of the biggest projects and protocols in the ecosystem. And what we found is a lot of founders, especially within Web3 and crypto, haven't had a ton of time to just like sit and think about what metrics matter most to our business, and to track them on a ongoing basis. It sounds very simple, but it's just the space has been so crazy and fast moving that things like knowing how to prioritize a roadmap and KPIs and OKRs that you have to agree upon to go try and hit. We found a lot of teams just don't know how to do that very well. So we spend a lot of time with teams on product design, go to market, and then we typically co-lead the round. So we work with a lot of really great funds on some of the other things. So we're not claiming to be regulatory experts. There are other funds who are probably better at things like tokenomics, but we really think that what we bring to the table is particularly interesting, especially right now as we're moving more towards this application layer meta, which we're really excited about too.
Yeah, super interesting. It is just such a crucial element to be able to bring to the table, especially right now, right? Hey everybody, quick thing here. We're excited to announce WAGMI Advisory, your home for all things fundraising, hiring, and partnerships. This is all about supercharging your project with the WAGMI network, consisting of over 20,000 executives, investors, and builders in crypto, all ready to come alongside your project to help it succeed. Get in touch at team@wagmiventures.io to learn more and figure out if WAGMI Advisory is the right fit for your project. Now, let's get back to the show. So, one question I have that's a bit of a recurring question on this podcast, but I'm always curious about kind of earliest challenges associated with whatever endeavor the guest is kind of undertaken. So, as you transition from, for example, from scout investing to solo GP to kind of building a team at Chapter One, I'm curious maybe one or two early challenges associated with that, and then how did you and your team think about solving for those challenges?
Yeah, we really just think about building like we view Chapter One as being a software company and an early stage startup, and our one of the main goals of our startup is to be the first call for founders when they're building a new company. And so there's a lot of ways that you can build a reputation and a brand to become that first call, but it just takes a lot of time. So we're always thinking about how do we stay relevant to new generations of founders who have just an abundance of capital choices, and when you're kind of defining that product for founders, how do you compete with the top funds? And so we've just spent a lot of time iterating on that. And early on, I think when you're just getting started as a venture fund, you don't have to beat other funds. Like you don't have to co-lead or lead deals. But when your fund size gets a little bit bigger, suddenly you're having to go head to head against a lot of really talented people at other venture funds who have great products too. So you're always trying to just iterate on what you're doing and make sure that founders respond well to kind of what you're offering them when you're trying to pitch them on why they want to partner with your team. And so we take that really seriously. And in the spirit of being a software company that deploys capital, we do things like every quarter we check our NPS score with founders, every founder in our portfolio, to see how they rank us. We send our founders every single month an investor update that tells them everything we did for them that month. And then we track it all through data tools that we've built internally, which they find to be really interesting because most of the time investors are asking founders to send them updates. And we really believe that when you partner with a team, you're becoming a part of their team, and not doing so in an overbearing way, but just saying, hey, we want to have accountability for being a good partner. And if we're not doing a good job, tell us how we can do better so we can build a better product for you. And we think over time, reputation is all you have in our industry. And if you do a good job for the founders you work with, that will compound in many years. So hopefully when we're around in 10, 15 years, we'll continue to be that first call just because we feel like we've done a good job for the founders we work with.
Super, super interesting. Okay. I love that notion of kind of a two-way street of accountability in some ways, of being able to say, here's kind of what we've been up to on your behalf. I think that strikes me as really unique, and I'm sure founders really appreciate it. So I want to circle back to talk a little bit more about what you guys are thinking about right now, but I'd love to maybe take a step back and talk about the Web3 space more broadly for a moment too. So especially right now, right? Like I'm curious, this moment we're in right now, as prices are kind of pumping and people are talking about sort of the potential end of this bear market, how would you narrate this current moment that we're in?
Yeah, I think there's just a general feeling that we hit the bottom and kind of all the bad actors have been swept out of the space, paired with more regulatory clarity. And then obviously the institutional interest in Bitcoin and ETFs. And then we've seen a handful of really interesting applications and experiments that have managed to catch some interest. And so I think there's just a general feeling that we've hit bottom. What's different from this moment as to kind of other bull markets that I remember is there was always kind of a new breakthrough product or innovation, whether it was DeFi or NFTs, that really kind of marked the start of the bull market. And during those moments, it's not always so obvious what that will be or what that catalyst might look like. And so I think right now we're all, at least on the venture side, trying to identify what catalysts there might be. And maybe like the catalyst is just, hey, we trust that crypto is not going to zero, because if it were to go to zero, that might have already happened. But I think the obviously the Bitcoin narrative is really interesting. And my hope, and I'm sure you feel the same way, is that we can in this moment in this next bull market really build products that are sustainable and have end user interest that goes beyond speculation and kind of price action because that's I think it's just very important to prove that there is long-term utility for the products that we're building outside of Bitcoin and stable coins and that like end users really do want to interact with these products on a daily basis. But I think we're gonna find that. And I've been really encouraged by a lot of the recent experiments, whether it's Helium Mobile or a lot of the things happening in Deepin. And obviously, there's been really interesting things happening in RWAs and other categories that are just very interesting. And I feel like we're going to find some breakthrough application soon. And I think probably we'll look back on this cycle and maybe it might be the application layer cycle where we finally found applications that really pass the bar for what might compete with a Web2 product.
Yeah, I love that. I definitely share your aspiration to see kind of more applications that go beyond speculation, right? I think it's really interesting to get a window into kind of the different types of things people are building that are exploring these questions in new ways. So, one question I had as to you as someone that has kind of this audience and this distribution you mentioned, especially on Twitter, but elsewhere, right? I'm curious about this idea of a platform, right? And I think I read in a blog post you'd written, I think it was on your Substack. The piece was Bare Necessities. You've kind of mentioned this FOMO and temptation of bull markets that I think anyone that's been in the space for a while kind of can easily recognize. And so I think I'm curious what guidance you might offer to those who are maybe a little bit newer to crypto about how to keep your head on straight and kind of think well about the different market cycle.
Yeah, I mean, I've always just taken a very long-term view of the space. And so the thing I would encourage, it's funny, like one example is I have two friends who 2 years ago, I convinced them to buy Solana at, it's like somewhere in the 100s, and they got really anxious a year ago and they sold everything around 15. And they were texting me every day, kind of asking me why I gave them such bad investment advice. And those same friends are now texting me this week, and they're like every day, like Solana's at 66 or Solana's at 68. Like they're tracking the price, and I think there's this gambling aspect of crypto which people try and win, and you'll just get wrecked most of the time. And so I think, as a newcomer, I always just encourage people to approach things with a very level-headed long-term mindset and to primarily invest in known projects, and we all know what those are, and not get carried away. So that's really my best advice, is to think of this as being investing in technology companies and software. And as you'd approach hopefully the public markets, like whether you're investing in Nvidia or Apple or Google or whatever it might be, like really do your research and invest in things that you understand and believe in. And that's pretty much the best advice I can give.
Yeah, super interesting. Okay. So if you were to kind of put on your prediction hat here, and this is another kind of recurring question on this podcast, where if I ask the future of crypto is blank, maybe 5 years, 10 years, 20 years, how would you fill in that blank?
It's a great question. I think for me, the future of crypto is just another layer of the internet that offers new financial opportunities and a new design space for builders and investors to participate in more open markets and more open ecosystems. And so again, I think back to the open source comment earlier, like I really do view blockchains as being a more transparent and trusted way to build many different products. I said another layer of the internet because I also don't believe that Web3 is going to replace Web2 entirely. I've never thought that because there's a lot of really great Web2 products that have distribution and moats that are almost impossible to replace. And so I've always just believed that Web3 is a really interesting new architecture and way of building software that should be interesting to many different engineers who want to explore new use cases. And again, a lot of it's around ownership, incentive alignment, and distribution, and creating new economic opportunities that I think are really interesting. But I would I would I would view Web3 as being a new layer of the internet that should be really interesting to engineers and end users and continue to believe in the space, but not, I think probably what's different that for me and maybe other guests that you've had is I don't think we need to view it as being zero sum with the rest of the internet, and would encourage other folks to have an open-minded idea towards that too.
Definitely, definitely. Super interesting. Okay. So you've kind of shared some thoughts on, some advice for being in crypto in general, right? I think I'm curious for crypto founders specifically, from the other side of the table as an investor, what advice might you have for crypto founders that would be valuable, especially if they're maybe kind of earlier in their journey, right? Curious what maybe even things that you wish you knew early on about being in crypto, kind of besides sort of the price action or whatever, but just like, you know, what it means to be a founder in this particular space. I'm curious what maybe your most generalizable advice there would be.
Yeah, the biggest advice that I've seen is just you need to prepare for many different markets within the life cycle of your company and have the vision from both an operational and technical perspective, but also a psychological perspective to get through those moments. And so, yeah, it's pretty well known that most public companies, software companies, take 10 to 15 years to go public. The difference within Web3 or crypto when you have a token is you go public much sooner, which creates another set of complications where you're almost like day to day, you're operating as a startup, but the public views you as being a tradable asset and almost a public company in that way, which is really hard on some founders. And then I think for founders who are more, like call it Web3 SaaS, so equity projects, they have to hit similar benchmarks from a revenue perspective that you would see from traditional SaaS companies. And there's very violent market cycles where, you might build the best product within your vertical, but for two years, the space might just be cold from a narrative perspective within the venture community. And so I think that's very challenging. I'm seeing right now today a lot of teams in our portfolio and beyond who are fundraising and started to do so pretty quickly because I think they know they've seen that you need to be very opportunistic around capitalizing your company and making sure that you have runway. And the best way to do that's when things look a bit more optimistic. And so, today is much different than 6 months ago, where I feel like there's a tremendous amount of optimism within the crypto community. And so for founders who are early, I'd really encourage you to be open-minded about taking on more capital during those moments. And I've also seen some founders who I think over optimize on fundraising and have lost out because maybe the like small differences in valuation, and they end up being in a really tough spots. So a lot of this comes down to, I think, the like capitalizing your company and making sure that you have a long enough time horizon to go build your products, because the timeline also on crypto Web3 continues to be pushed out, and that's okay because I think the best investors have a longer term view, but we don't truly know when all this is going to become like quote unquote mainstream. And so I would just encourage founders to really capitalize their companies and be prepared for a long build time, and if you can get through these tough cycles, you will be stronger. And we've seen a lot of our founders who have persevered are in great positions, and then some people just can get through the bear market from a personal level or a financial level, and that's okay too. But those founders kind of get washed out, unfortunately. So yeah.
Yeah, super interesting. Okay. So, Jeff, maybe one last question here for you. What is your team working on right now? And what's the best way for people to follow along on the chapter one journey?
Yeah, our team is trying to identify another 6 to 8 new investments over the next year, really. And so we're excited to meet founders who are building in the space. My Twitter handle's at JMJ, which is probably the easiest way to stay in touch, and would love to meet new folks who are building. So hopefully the optimism continues, and we get through the bear market, and next time I come on the podcast, we're talking about all the products that have end user adoption, because I think we're going to get there. We're making progress.
Love it. Jeff, thank you so much for coming on the show. Fascinating insights and really, really great stuff. So really appreciate your time and hope your upcoming weekend is a good one.
Thanks, Jenna.
All right. Bye-bye. Hey, everybody. Thanks for listening. If you enjoyed the episode, go ahead and maybe give us a good 5-star rating and subscribe wherever you're getting your podcasts so you can get all the latest conversations with the most interesting crypto founders, investors, and builders from across the world. Thanks so much. Have a good one.